I'll just take a generic rather than specifically how we do it, but it's true for most funds, right? So let's say you want to raise $1 million. The first thing we will do at least is understand the team, understand the market, and understand the value proposition, right? What is the problem they're solving? What is the size of the market? Who is the team that's executing? These are the first three things that we will really deep dive into. And when you're looking at the market, you will assess how big it is. When you're looking at the model, you will see, hey, they can scale with this amount of capital. They need to do these things. This model looks like it can scale, which means either the lifetime value of customers is really high or the CAC is really manageable. The LTV to CAC makes sense. LTV to CAC is a very good way of looking at any business, SaaS, consumer, because it just tells you how much value you can get from a customer and what is the acquisition cost
But
that you have.
at the early stages, don't you think that like LTV CAC numbers are not truly reflective? Because
Absolutely not. They're not. They're not. So, I mean, I'm just saying in a consumer business, you could get these numbers. In a software business also you can, but in some businesses you can't. So you'll have to identify another metric, right? You have to get either LTV or CAC or proxies of the same. So proxies would be engagement, right? How much are people using this product, which means that they will pay for it and they will stick to it in the future potentially. How much are you having to acquire customers for that? I mean, you will always have to compute. LTV might be difficult, but CAC definitely. I mean, you are spending some money or time, things like that, right? So that's a good question. And then you look at the team. Can they execute what they're saying they can, right? We are backing this team to be able to execute, to be able to scale, to be able to build a big business, right? Can they do it? So you will evaluate these three things and see if that makes sense. Another thing that investors look at is a hurdle rate. So generally, a lot of startups tend to not succeed or survive, and the most is like 1x or 0, right? Either you just put X and you get back X after some time, or you put in X and you get nothing because the company dies, right? So you will try to see if you can get a 10x return on the business, right? On the investment. So let's say you're investing 1 million for 10%. That's a 10 million valuation post money. Can you get to 100 million valuation in this category is the question. What do you need to do that, and what does the team need to build to achieve that? So we'll ask that question then, and then see if that it's realistic. So if you're building $100 million business, what are generally the revenue multiples or the EBITDA multiples? Can they get to that? Is it realistic in a 4 or 5 year time horizon, or will it take like 20 years? Or can they get even earlier? And this looks like a great bet. So things like that are questions we ask and we try to assess. And then once we get to the answer, we make a decision whether we want to invest or not. But you need to check a lot of boxes. And investors actually do very few investments per person. So the bigger funds have bigger teams. So that on average, an investor who could be a partner, vice president, or something like that does 1 or 2 or 3 at max investments a year. Because you're looking at long-term careers, 5 to 10 year careers. So you're doing 15 to 30 investments over a 10-year horizon, which is quite a bit.
Right.
I directly pitch to partners, but some funds you could be more junior or you could be more senior, depending. But if you're once it gets to the partner, we can talk about that, because the steps it takes before that could depend on how junior you are in the firm, right? So the number of folks you need to, get buy-in. But once it goes to the partners, you have an investment committee that makes a decision. Usually it's on a weekly basis. You evaluate 1 or 2 companies and so on. And the decision is like, hey, it makes sense for the partners to meet with the founders. So once the partners meet with the founders, they take a call that, hey, this is interesting, let's go ahead with it. So then you start deep diving into the company. You get more specifics into details of customers, their numbers, if that makes sense, talking to teams, doing customer calls, references, things like that, to understand the business in greater detail. And this exercise could take anywhere between 2 to 3 weeks to a month. And then you make a decision, hey, yes or no, do we want to submit a term sheet or not? So once you submit a term sheet, Then you actually have like financial and legal due diligence, which could take 45 to 60 days. And then the investment is made. So I would say from the time you are introducing a company to a partner, it probably in a good case could take 2 to 3 months before the money hits the bank.